How much do you want me to cover? Because I have a kind of presentation that is pretty much very general regarding what you can do with self-directed IRAs.
Mm-hmm.
And so I was going to touch base with, crowdfunding and all that stuff, because all of that a lot of it's being covered basically with other entities as well. So assets, a lot of the crowdfunding goes through you investing either private equity, real estate funds, startups. So do you just want me to just focus on the private equity aspect, on the crowdfunding aspect, or do you want me to kind of touch base with everything you can do with self-directed IRAs?
I would say give as much information as possible for the community, because their investment journey is all different. Everybody's investment journey is different, and so I say the more we cover, the more information we can provide to everyone.
How about this? I'll just to make it easier on everyone, I'll do kind of a general understanding of what self-directed IRAs and what you can invest into, and then from there, I can, if people have specific questions in the areas that they want to invest into, I'll go over that.
Okay,
that works. I think that'll probably be the best, because that way I don't have to bore people with things they don't want to hear about.
Nope, that sounds like a good plan. Hi, Cherie.
Hello, everybody. Good evening. Good evening. Hope all is well. We are expecting more people, Artem, so we usually like to get started about 3 minutes after the hour.
Is Marlene part of the panel, Cherie?
No.
Okay. Marlene, I see you have your hand up and you're saying you can't control your sound. We can't hear you, but we shouldn't be able to hear you. Right. I think the question, though, Marlene, is can you hear us and can you see us? Because this is a webinar, so as long as you can hear us and see us, then you're in the right place.
Perfect, perfect. Everybody put your city and state in the chat. You know how we do it at the 10K Project. Put your city and state in the chat so that we can recognize all of you here this evening. Oh, Moe's saying her first webinar. Well, welcome.
My dear.
You think you're in for a treat tonight? Everybody put your city and state in the chat. We got Philly in the house, DC, New Jersey, Georgia, North Carolina, Texas, Houston and Dallas, Florida, North Carolina, Nebraska. Got Nebraska in the house. Oh, Marlene, he's going to go over all of that. Don't worry.
Right. Listen, Marlene, I needed that. Girl, I needed that laugh just now. Marlene came with her questions already. She said, I know what questions I got.
I saw that. That's great.
So Marlene, we typically go for an hour and we are going to give Artem the floor. So trust me, and then we'll make sure that he has a chance to answer as many questions as possible. And he'll also give you his contact information if you have other questions. So
yeah, I think what I'm going to do probably is, do a kind of a general presentation. It gives you more time for Q&A, because there's going to be a lot of questions, and I want to make sure I answer them as much as I can, versus just talking about certain topics that you might not be interested about. Right. So I was going to go over the general stuff and then kind of go into Q&A and hopefully help everyone answer any questions I have.
All right. Well, I'm going to get started really quickly with just telling everybody who we are and what the 10K Project is. So I'm going to share my screen here really, really quickly and just let everybody know we're the 10K Project. We are the largest community of small dollar investors who actively fund Black-owned businesses. And when we come together to fund our own businesses, we can profit from our own innovation, we can create jobs, and we can help build Black wealth as a community. So many of you may not know this, but our businesses, of course, don't receive as much funding as other ethnicities. However, it's been proven by Morgan Stanley in a report that they did that when our businesses are properly funded, we make just as much money as any other ethnicity. There's an opportunity for us, which Artem is going to talk about here as well, for us to start funding our own businesses so that our businesses can have the money that they need to start and grow. And the way that this is done is through the Jobs Act of 2012. So this is an opportunity where Black entrepreneurs have the option to get the money that they need from regular people like you and I, everyday people who have small amounts of money to invest. We are called the crowd, and this is called equity crowdfunding. And the way that equity crowdfunding works at the 10K Project is entrepreneurs work with an equity crowdfunding portal to raise anywhere from $10,000 to $5 million. And raising of these funds are regulated by the SEC and FINRA, which is another government organization or agency. Then every week, we feature a Black-owned business who is coming to raise capital through this method of equity crowdfunding. We call it a Bet on Black pitch. So they come, they talk about their opportunity for investment, they answer the community questions, and then you as an individual investor has the ability to hear the pitch, review the business plan, research the company, and if you like that company, you have the opportunity to invest as an individual in exchange for shares in that company, which is partial equity or partial ownership in that business. And then if the company makes it big, the crowd shares in the profit, but if not, investors only lose what they put into the company. So the ecosystem that we're building ultimately includes three groups of people: entrepreneurs that are raising money, investors who have small amounts of money to invest into a company if they hear the Bet on Black pitch and they like the company. And then the third group are product and service providers who can help that entrepreneur start, grow, expand, buy businesses. Anyone from CPAs, attorneys, project managers, etc. So we want to invite anybody who's here who is not a member to become a member. The10kproject.com. It's a $100 one-time payment. You get access to the Bet on Black pitches, which happen every Tuesday night at 8 p.m. Eastern. You also get access to our expert directory. You can access it as well as put your information in. We've got members-only wealth building webinars, peer-to-peer conversations, and so much more. So that's the10kproject.com, the10kproject.com if you want to become a member. So with that, put a 1 in the chat if you're ready to hear this conversation. How many of you have ever heard of a self-directed IRA? Put a 2 in the chat if you've heard of a self-directed IRA. Put a 3 in the chat if you've never heard that term. Self-directed IRA. Okay, so Artem, you could see our community. Some people have heard of self-directed IRAs, other people haven't. Well, we have a gentleman here named Artem who is from a company called Midland. And I will tell you that years ago, I had a self-directed IRA, and Midland was the company that I had my self-directed IRA through. So, I'm just telling you that at least back in 2005, I feel comfortable with being able to tell you that I had a self-directed IRA through Midland. And this is a tool that the wealthy use, and now we're getting access to it as well. So Artem, I would love for you to take an opportunity. What do you want to take, like 10 minutes, give the overview?
I'm going to just do a quick presentation, kind of tells you about Midland as well as, what are the steps and what you can invest into.
Okay, perfect.
So if you don't mind, let me try to share the screen real quick.
Let me know if you can do it.
Sure. All right. Do you guys see this?
Yes.
Perfect.
Yes, yeah.
All right. So let me see if we can make sure everything works. All right, perfect. So this is my contact information. I will also have it in the back at the end of the presentation as well. So don't worry if you missed it. So about Midland Trust, we're a self-directed IRA custodian as well as a 1031 exchange specialist. We are located in Fort Myers, Florida, as well as in Chicago and Sioux Falls, South Dakota. We have just over $3 billion of client assets held with us, and we have 20,000 accounts that we hold. We've been around for at this point just over 23 years. So we've been around, and we started off small and been growing kind of ever since. One thing we're going to tell you right away, Midland, we do not give out an investment advice or endorse any products. We're very different from a lot of custodians, and I'm kind of going to explain to you why and how. So what is a self-directed IRA? So self-directed IRA is not a special type of IRA of any kind. It's a regular IRA that you would have with banks or investment brokerages like Fidelity, Charles Schwab. So there's no difference in what we do versus them per se. The big difference is that banks and brokers focus primarily on investing in any stocks, bonds, mutual funds. And that's pretty much 99% of IRA custodians do that. And they will never tell you that you can actually choose what you want to invest into. And this is kind of where we come in. We give you ability to be to diversify your retirement funds and have you choose what you want to invest into. I talk to a variety of different people every day, and I ask them the same question. Most of the time, what is your 401k or your IRA that you hold? Do you know what's invested into? And most people have no idea. And so this is kind of the difference between us versus banks and brokerages. We do the same as a thing, give you tax advantages accounts, give you investment options where your banks or brokers won't let you. Like I said, they will only let you invest into things that they make money on. Their administrative fees are usually hidden. It's based on percentages. Ours is a flat fee schedule, meaning we will show you from day one, what are our fees, and if you want trying to do something, we'll tell you exactly how much it's going to cost you. And the biggest thing is, you will hear this over and over from any financial advisor is diversify. But unfortunately, they'll tell you to diversify only in the things that they understand and they have kind of control of and what they can make money on. So these are just some of the investment choices that you have in a self-directed IRA. So we work with a lot of real estate investors, people who give out promissory notes. They want to invest within the single member LLCs, private placements, so private stocks, precious metals, foreign currencies, and so much more. These are some of the other investments that we kind of cover. There's only really two things you cannot invest into with your self-directed IRAs, and that is life insurance or collectibles. So those are the two items that IRS restricts you from investing. Pretty much everything else you can think of, you can invest into with your IRA funds. And the process is pretty simple. You open up an account. Takes us roughly about a business day to open your account. You fund that account with either your IRA funds or your 401k funds. And then you just choose what you want to invest into. So that's pretty a quick kind of explanation about what is a self-directed IRA. The thing I want to kind of cover and is basically how can you invest in these businesses. So there's a couple of different ways you can approach it, and each business has their own strategies that they want to go with. You can either invest with them through notes. You can buy basically shares of their company. And all of that is just case by case basis. And so we're happy to help anyone regarding this aspect.
Great,
so
fantastic.
Kind of just a quick overview on things. And I think the best way, if we want to kind of go over quick questions, I can kind of touch back into any kind of assets that you're interested into or common questions that you might not have ever gotten answered for.
So can you walk people through a little bit more about, if they have like how to set up an account? So what is the process? Is it just as easy as setting up a Charles Schwab account? Is there anything else we have to do?
It is. It's actually a very, very simple process. It takes roughly 10 to 20 minutes really to fill out our online application. It's mostly just personal information about yourself. And then at the same exact time, you'll fill out information of where you would like to transfer the funds from. So from your existing IRA or a 401k. So regarding 401ks, if it's your current employer and you have the 401k through them, you might not be able to move those funds. So depending on how the 401k has been set up, if you might not be able to move the funds out because you're participating within that 401k plan. And so there's usually strategies that come with it. And so you have to meet certain criteria to be able to move the funds out. One would be maybe leaving the company. Two, you're a retirement age. And so, but each 401k plan's set up very differently. And so what we usually advise people do is reach out to your 401k administrator and ask them, can I move my 401k funds into a separate IRA? If they say yes, we'll be happy to help you go through this process and walk you through. Our applications are 100% online. You sign everything online. Like I said, it takes us about a business day to open up your account. When the account is open, you actually will get a dedicated rep that's going to be working with you and who will understand your investments. And, we have a lot of different asset types that people invest into, like I mentioned earlier. And so for each genre of the asset, basically, we have a dedicated reps that specialize in it, that understand it, and that you can reach out to them personally versus just, calling a 1-800 number and getting a call center that you have no idea who you're talking to. You have a dedicated person that you reach out to, you ask them specific questions, they'll answer to you right away. And we try to make that process as simple and as easy as possible because we know that no one wants to be on hold for an hour just to get a general question answered.
True.
So I have a question along the same lines. So if someone is at a current employer and they are unable to transfer that money into a self-directed IRA, what options do they have? I mean, can they still get a private IRA or self-directed IRA and put money into it?
Correct. Yes. So you can open up an IRA, personal IRA account for yourself anytime, and you can contribute money to it. So for 2021, you're looking at a $6,000 max limit for anyone under age of 50. And then if you're over age of 50, you have $7,000 contribution limit. So you can do that pretty much anytime you want to. That's your personal choice and your personal account. And so you can fund it every year and you can invest anything out of it. Because of the limitations, your 401ks, usually you can invest more into it. You can invest up to $19,000 into it if you wanted to max out every year. So those are the kind of the differences between those two. And if your employer matches your contributions, that's fantastic.
All right. Tawana, do you have additional questions before we go to the Q&A?
No, we can go to Q&A.
Okay, perfect. So first question here is from Erin. Can I transfer stock into a self-directed IRA and sell it within the IRA and purchase a different stock or asset with those funds?
So technically, yes. If you have your IRA account with a brokerage, like I mentioned, Fidelity or Charles Schwab, you can do in-kind transfers between different brokerages. We at Midland specialize in alternative funds. So we don't do anything with stocks, bonds, mutual funds. We figured there's plenty of other custodians out there that specialize in it, and we let you use them. For us, if we specialize in alternatives, so all the assets that I've mentioned. And so for us, if you want to transfer money from, like you mentioned, you want to transfer money to us, you would have to liquidate your shares of your stock so you can transfer the cash to us. And within our industry, so focused on the self-directed IRAs, for example, you're invested into a company and you own private company that's not publicly traded, you invested into it, you can move those funds from a custodian to a custodian without an issue as well. So just the transition between your Fidelity broker to us, you would have to cash out of your position to be able to move the funds over to us so you can reinvest into alternative investments that we can hold, okay?
Okay. Another question from Erin. Can I transfer crypto, either Bitcoin or other coins, into the self-directed IRA, or do I have to put cash into the self-directed IRA and then buy the crypto from within the IRA?
So crypto has been the hot topic of this year. And so this is something we've been working on for the past year, trying to figure out. Our rules dictated by the IRS, and IRS really hasn't described or told us really what rules to abide by. So what we have to do is basically abide by the general rules that was set for other investments. So one big thing, if you own crypto yourself personally, you cannot move it into an IRA. You can purchase cryptocurrency through an IRA, and you have kind of a tooth right now. You have pretty much one choice of how you want to approach it. So you open an account, you fund that account with the money you want to invest into. And this is where it gets a little bit complicated, and we're trying to come up with a better solution. But how it's going to work is that you will open an LLC that your IRA is going to be the owner of. So it's a little bit complicated, but it's not that hard to do. And so what happens is that LLC is going to be owned by your IRA account. When the LLC is formed, you can open up a bank account with the name of that LLC and fund that bank account from your Midland Trust IRA. At that point on, you can open up a trading account through many, many different cryptocurrency exchanges. They can go with Coinbase, Binance, Kraken, really whichever you want to go with. They all work this way. So they will take your LLC and open an account within that LLC, and then you can fund that trading account with your IRA funds that you hold in your bank account. It is a little bit of a complicated process as of right now, but it is definitely doable, and is definitely a really good way to be able to avoid any kind of potential future tax implementations that the government is going to impose on everyone, basically regarding holding crypto.
Okay, so then there was a question in YouTube about, are these IRAs tax-free like a Roth IRA, or are they a standard? I'm sorry, are they like a Roth IRA, or are they like a standard IRA that's tax-free? So you're saying
so we have both. You can open either of them. So yes, Roth would be tax-free. The money you're putting into your Roth account has already been taxed. Mm-hmm. And so any kind of gains that you receive in that account is 100% tax-free, which is fantastic. The other choice would be basically regular traditional IRA, which is tax deferred. So you can hold, you're not going to get taxed on those funds until you take it out of your IRA when you're in retirement age. And the concept of that is that when you're retired, your income for the year is going to be lower. So your taxable income is going to be lower And so at the end of the day, you'll pay less taxes on the money you're pulling out. Yeah. But both of those accounts are doable. Both of them we hold. And so that's not an issue at all.
Perfect. Ebony is asking, okay, so what are the issues that would trigger the IRS in penalties when using a self-directed IRA?
So that would be you taking distribution. So you taking the cash personally. So you're taking possession of it. So for like just very, very simple example, and the one we see the most is through that LLC setup, like I mentioned previously. When you have this LLC set up and you have a bank account for that LLC, and that money is funded with IRA money, some people forget that it's not technically their money, it's their IRA money. And so they start using that for their own personal gain, for basically paying their own bills. And that is, by IRS rules, is illegal. And so that's when they will count it as a distribution. So that's when they're going to start taxing you on that funds. And it's one of those things that you might get away with it once, twice, but if IRS does get a hold of it, there's going to be problems with it. And so no one wants to mess with IRS. You'll never get away with it long term.
Absolutely. Next question. What actions can you take if people really don't know what to invest in? Does Midland help with any kind of advice or anything like that?
No. So because we took the approach of being completely third party as an administrator, where we looked at it as that we don't want to put investments in front of people because we don't know how they're going to do. We want to make sure to give you ability to be completely self-sufficient about it and choose what your investments are. And so we look at it as we don't want to put bad or good investments in front of you because, again, we don't do enough homework on them regarding to me if they it's a risk like anything else investing. Like any companies that come in and want to pitch with the 10K project, some will succeed and make a lot of money, some of them won't. And so we don't want to be liable for any of those aspects. And so it would be up to you as an individual to research what you're investing into and believe in that investment.
Perfect. Do you have an inventory list of permissible investments? Is it just the ones that you showed us in that other slide, or are there others? Do you have a list?
So you can invest into, like I said, pretty much anything you can think of except for two things. And that would be life insurance and collectibles. So one of the things that I'm going to mention is on this page, you see you can invest into precious metals. So you can purchase gold, silver, but if you're purchasing a special gold coin that the value of it is greater than what the actual gold value is, it's not going to work because that's considered as collectible. If you want to treat that collectible coin as just precious metal and count as the valuation of it based on the gold, that's completely fine. So because how IRS rules are written, you can really invest into anything except for those two things. And that's where cryptocurrency is the kind of new thing that popped up. There's no rules on it. There's no, it doesn't describe of how you want to approach it, but you can definitely invest into it. That's not an issue.
Yeah. So art would be included in collectibles too, because someone's asking about that.
Correct. So art technically is considered as a collectible. There is a company out there, I believe, where they treat art as an investment. And so I believe how they treat it is more of it's treated as a hedge fund that invests into art. Mm-hmm. So that falls into kind of a gray area where there's different levels in between you personally buying art with your IRA versus you're investing into a company that buys and sells art. So that's where kind of there's that degree of separation where IRS kind of doesn't consider that as being a prohibited investment type.
Right. Kathy is asking if there is a minimum amount you need to open up a self-directed IRA.
So with us, the only minimum amount we need to have at our account at all times is $250. So $250 is the minimum amount you must have in your IRA for us to be able to keep that IRA open. So for example, if you wanted to make $10,000 investment into a business, you need to have $10,250 technically brought into the account so you can invest that $10,000, because we always need that $250 in the account in cash to have that account open.
Okay. What are your annual fees?
So we have actually, I'm just going to pause the share real quick, and I'm going to bring up my our fee schedule. That way we can kind of go over that, if you don't mind. 1 second. And the reason for that is really because we have 2 different fee schedules that you can choose, and that's something you could choose year to year. And let me see, give me 1 second, sorry. All right. You guys see this all right?
Yes, we can see it.
Okay. So like I mentioned earlier, we show you our fee schedule. So it's all up to you. We don't have any hidden fees. We don't have any percentage fees of any kind. So we have 2 different fee schedule in front of you right here. One is asset-based fee schedule, which is a flat fee. Doesn't matter how much money you're investing. It could be $5,000 or $5 million. It's still going to be the same exact amount. So, for example, a lot of the crowdfunding platforms, they use it to be considered as a private placement. So if you invest into one business, that's one asset, and you're looking at $325 a year to hold that asset within your IRA. My apologies. The second option would be account value based. So it's a tiered fee schedule. So the more money you have in your IRA, the larger the annual fee is. The reason we have 2 is that, for example, if you wanted to invest into 10 different businesses at $10,000 each, your value-based fee structure comes out to be cheaper because technically you invested $100,000. And so you're looking at an annual fee of $700 versus if you went with an asset-based fee structure, that's $325 for every investment that you could do. So we give you this ability to be able to choose every year of how do you want to approach your account? Do you want to have value-based or do you want to have asset-based? You do have to tell us how you want to proceed with it. And so it's your choice to see what is a better structure and which way is the cheaper way for you to go. For year 1, your fee is going to be a little bit higher. You're looking at a one-time $50 account setup fee that is paid during your application process. So when you're filling out your application, you'll pay that $50. And then transaction fee. So this is actually a one-time fee. Basically, you pay for setting up an investment onto your account. So you want to invest into the business. We receive all the paperwork from them so you can invest with them. So you're looking at $100 transaction fee. And so basically for us to be able to fill out all the paperwork, make sure everything is correct, done properly, and that we can report everything to the IRS regarding your IRA. The only thing else you're looking at is potential wire fee. So for a wire transfer, so outgoing domestic transfers will be $30, and that's paid basically whenever you do a wire.
So Artem, I want to make sure I understand. So can you scroll up just a little bit more?
Yes.
So with the fee based on the number of assets.
Mm-hmm.
So that's that fee, that 320, let's say 325. That's per real estate investment. Am I reading that right?
So it's multiple different assets under. So it's 325. It would be for real estate investments. You're investing into through an LLC, private placements, any note or mortgages that you want to do out of your IRA, futures or forex brokers accounts. So all of those considered as one. Any of those would be one asset. So if you want to purchase a rental property within your IRA, each property that you hold would be considered as a one asset. So each one is going to be $325 to hold a year.
Okay. So okay, I get it now. So instead of paying the fee based on the amount I have in the account, I'm paying it based on the asset class, and I'm doing that per asset.
Correct. So, and that's what I said. It's, for example, let's say if you bought a house for $200,000 in your IRA. So because of that, you're falling on the value based. You're looking at the $950 a year. But in that, your house can appreciate, it can depreciate. So technically, if you're under account value based, your fees can go up a little bit or can go down a bit. It's really depending on that. But with the asset-based fee structure, it's a flat fee of $325. So you don't have to worry about that. 3 years goes by and your house doubled in value. The fee is still going to be $325.
$325. So what support are you providing annually?
Define support.
So, I mean, the fees seem a little high to me, but so tell me what are you providing for this fee? If I have issues, I can call customer service anytime I want. Like what services?
Yeah, you have a specific dedicated rep that you work with that can answer any questions about your account. But this fee is really and it might look big because you're looking at a full annual number. But if you consider it in a percentage basis, and if you look at your 401k structure and your year-end reports and see how much we're actually paying in percentages, majority of the time, if you compare it to 100,000 with us versus 100,000 with any other broker, mm-hmm. your fees with us are actually going to come out to be a lot less.
Okay.
So it's going to be, it's hard because we look at all their accounts that we have, and I've did this before as well, before joining with Midland. I look at my 401k, I'm like, well, it's free. I don't see the cost of it. I don't see the point of it. Yeah, so
but it still costs money, right? You're just not paying it. The employer pays it, right?
Well, no, you're paying it because it deducts from your annual returns. So at the end of the day, they'll give you a statement of you made 6% this year. Great, but you actually probably made closer to 7%. But that 1% they don't tell you about is paid by by the money that you made. So that's where the difference of approaches is. Ours is flat up front. It's transparent to you exactly what it's going to be at the end of the year, versus being hidden somewhere at the end of a 50-page report that sadly no one reads, mm-hmm. usually. So that's kind of the difference. And our fees, you can look at it, and it's very comparable to any other self-directed IRA custodian that does exactly what we do. But I guess, but that's one of those things that if you hold more money or investing more money, the fees get smaller and smaller.
Right. Okay. Thank you.
You have additional questions, Tawana?
Nope. You can go to the next one.
Okay. And let me know, Tawana, we have a ton of questions in here. If there's one that that you think people should know, we should all know. And somebody's asking here, can you open up multiple IRAs where the limits are $6,000 each?
So no, your max contribution between all of your IRAs is going to be that $6,000.
Yeah.
So you can have multiple IRAs. So most people have 2 or 3 IRAs, honestly, because you start with a company, you have a 401k with them, you leave that company, your 401k administrator says, hey, you got to move your funds out of it because it's not really doing anything. You're not part of the plan anymore. So people move their money into a one IRA. And so by the time they're 50, 60, chances are they'll have 2 or 3 different IRAs, but your contribution limits are still the same. It's going to be $6,000 a year. So you can contribute it between multiple different ones or just into one.
Somebody else is asking if they're able to invest in an LLC that they own. So I know that there are some restrictions with regards to family investing and things like that.
Correct. So the easiest way to understand, and this goes across all asset bases that you want to invest into. The easiest way to understand it is that you separate yourself from your IRA. So you and your IRA are 2 completely different entities. And so neither you or your IRA can benefit from each other. So, and that's kind of what IRS set up the rule for is. So there's no type of like money laundering and avoiding taxes on that. So you can't invest into anything that you personally own. So business-wise, you could not invest into your own business or anyone that's related to you up and down your family tree. So parents, grandparents, kids, grandkids, and any of their spouses are completely out of the picture. You could not rent properties to them. You cannot hire them to do work for you and pay them out of your IRA. So that is a restriction they need to follow. And I'm happy to kind of send out to, and sure, if you want to, I can send you a self-directed IRA guide that you can pass over to anyone that's listening and is on this webinar. It goes into a lot of different specific details and examples regarding what we're covering right now. So it's also a really good read and have as a guidance regarding following the rules with the IRS.
Yes, please send that to me. And why don't we stop sharing the screen as well so everybody can see the full picture of you?
Sure.
We'd like to jump, Cherie, to the next question. Anonymous says, would the sale of crypto from within the IRA be a taxable event?
No. So as long as your IRA holds that crypto account. So right now, like I said, you have to go through an LLC. But as long as the funds go from that crypto account to your LLC bank account and doesn't go anywhere, it's not a taxable event. So because technically your LLC is owned by your IRA and you're only investing with your IRA funds. So it's not a taxable event.
Okay, thank you.
Was there another question you saw? If not, I'll just continue down the line.
Yes, you can continue down the line.
Okay. Laverne is asking, I left my company and transferred my 401k to an annuity. Can I fund the self-directed IRA from my annuity?
So annuities are set up similarly to a 401k, kind of. So there are some rules usually set up with it of how long you must have your money in that annuity. Mm-hmm. So I would recommend calling the administrator that holds the annuity and asking them if you can. Most of the time, yes, but there is a lot of times the restrictions of, hey, you have to hold this annuity for 3-4 years before you can cash out.
Yeah, and Laverne, ask your where you have the annuity, ask them about the penalties as well. So
correct, because there could be some penalties if you leave before the mature date.
Yeah. Felicia's asking, can funds be transferred from a 401k due to COVID?
Can funds be transferred from 401k due to COVID?
I guess, Felicia, as long as it's an electronic transfer, Artem, it shouldn't matter, right?
I mean, you still follow the same exact rules. Your 401k administrator must approve be able to move the funds. They must let you basically do so. Mm-hmm. If that's the case, then yeah, it's not a problem at all. I'm not sure if she's talking the same exact thing, but due to COVID, you could have always borrowed money from your IRA, from your 401k, and you can. I believe you could still do that up to $50,000 or half of your IRA account, 401k account. But again, I would talk to your CPA first of all, as well as your administrator to see if they will let you or not. Right. So I think any decisions that you're making regarding your IRAs, contributions, or investments, I would definitely have your CPA look over any of the decisions you're making, because at the end of the day, they will know your scenario a lot better than us, where you will call us and we can only see your IRA account. We don't see the full picture. And so we always tell our clients to, hey, consult your CPA to make sure that any of your decisions that you're making make sense for you financially.
Okay. Next question from Kathy. If you already have an established LLC, how can you open up this self-directed IRA?
So and I'm guessing if she's talking about if you have an established LLC that's owned by yourself, it goes back to the rule of your IRA cannot benefit from your personal belongings or investments. So you would have to open a separate LLC. And what happens is that that LLC is going to be named in the name, have the name of it coming from your IRA. So the name of your IRA would be something along the lines of Midland Trust for benefit of your first and last name and your account number. That name is the name that owns that LLC. That is the name of your IRA. And that's what's going to be opening the brand new LLC for you to be able to invest out of. So you cannot, unfortunately, invest that money into an LLC that's already been set up by yourself.
Okay. Erin is asking, does Midland help me with setting up the IRA and or the bank account? So,
setting up the IRA or the LLC. So we can do both. So not bank account itself. That would be all up to you, because it gives you ability to open up a bank account anywhere you want to. Midland can help you set up the LLC and do everything on behalf of you. We do charge a fee for that. It's $6.95 plus whatever the state filing fee is. So each state has their own rules, and your LLC needs to abide by those rules and needs to pay those fees as annual fees. Some of them have a fee every couple of years. So that all dictates based on the state. So you can go through us to set up the LLC, or you can go through any attorney or really anyone you want to that understands how to set up the LLCs properly. You can go with them. That's not an issue for us.
But you do everything associated with setting up the LLC for the $6.95, operating Correct. Agreement and everything?
Yes. Yeah, we will set everything up for you. You don't have to do anything because of your IRA is the entity that's opening the LLC. Mm-hmm. All of the agreements have to be signed by us anyways. Okay. So we'll basically get your verbal approvals that yes, you want us to do this. This is the name you want to name the LLC and such. And then we will take care of everything else.
Okay, so I'm going to put two questions into one. Yashika is asking, how can we purchase property using a self-directed IRA? And Anonymous is asking, can we invest in a real estate crowd fund using a self-directed IRA?
So both the answers to that are yes. And let me actually have a slide here that I can pull up that kind of goes over the way to purchase the real estate. If you don't mind me, I'm just going to share this real quick. All right. Sorry at the beginning. My apologies. All right. So a couple of different ways you would go through a similar concept. It wouldn't be much different than your regular real estate transaction. So the only thing is, again, you have to look at it as your IRA is the entity that's purchasing the real estate property. So on the contract, so the purchase contract, you would put your Midland Trust IRA name onto the contract. And you would go through the same exact steps as you would for any kind of real estate purchase. The only thing is you will not be signing the contract. We at Midland will be signing on behalf of your IRA. And so it just takes a little bit of communications between the parties, basically. How it's going to work, there's a couple of different ways you can purchase real estate. One would be just cash purchase. So your IRA will hold, $200,000, and you buy the property outright cash. And that's more common approach. You can partner with someone to purchase. So in this case, you can actually partner with yourself or your family members, because you're partnering with them and you're not investing with them technically or into them. So you can actually partner with your spouse, with your parents, kids, whoever you want to. You can partner, and so your IRA can partner with personally or another IRA. So it does not matter how they're going to approach it. The key thing is the percentage of ownership matters a lot, and so that's something that needs to be tracked. And that is the case because any kind of expenses or income that comes with that property needs to be paid by the IRA, or the funds need to go back to the IRA. So if you partner with yourself 50-50, 50% of your rental income has to go to your IRA, 50% of the income has to go to your personal account. And so that's where it is important to understand the percentage of ownership and follow that. Checkbook Control LLC, it's whatever I kind of mentioned, the same exact setup as you did it for cryptocurrencies. And that is the most simplest way, honestly, to invest into real estate, because it would be no different as you would buy it personally in your personal LLC. Everything works the same exact way. You can also borrow funds, so you can get a mortgage within your IRA. So the only rule is that it has to be a non-recourse loan. And what that means is that you cannot personally guarantee that loan. It has to, the bank basically uses the property as collateral, and that is it. You cannot go after your IRA further, you cannot go after yourself personally. So because of that, it's a little bit of a higher risk for the lender. And so the loans are a little bit higher, and your down payment might be a little bit higher, but it's definitely possible. And that's something a lot of people do. And regarding crowdfunding, there's no difference as what it would be just regular private placement, because you're just investing into a group and you're buying shares basically of that fund. And so that's easily done with a variety of different crowdfunded platforms.
So then I have a follow-up question. If we're able to partner with family members for real estate, could we partner with a family member in another type of business? Or does the partnering only happen in real estate?
So the partnering is because you're both putting money towards one investment.
Okay.
So because you're not investing into each other's business, it's not illegal.
I got it.
Yeah, because you're putting two investments together to invest into a bigger investment. If that makes sense. So you're not technically investing into each other. So you cannot personally benefit from it.
Okay. So we have a couple of blockchain crypto questions here. The first is from JD in YouTube asking who holds our keys, or Jamie, sorry. Jamie's asking with crypto, who holds the keys?
Yeah, very good question about that. And it's something we've been debating for the past couple of months, honestly, because we have had several investors wanted to invest and hold that key in a flash drive or a hard drive. And that's fine. That's not a problem at all because it's a digital currency. You technically are not holding the currency. It's held in the hard drive, but definitely do not lose the hard drive or the code to get into it. Cloud-based wallets are definitely safer and easier to use, but you can definitely hold it personally as well.
How do you hold it? How do you guys secure it if you're the holder of it?
Because you're going through an LLC. When you go into the LLC, you're going to be responsible for holding it. So we have nothing to do with it at all.
Okay. That's good.
Yeah, that's the whole point of being 100% self-directed. It's Absolutely. Your money at the end of the day, and you choose how you want to approach it and how you want to use it and what you want to invest into.
Yeah, no, that's good, because if it's not your keys, it's not your crypto.
Exactly.
We learned that way back in the day. So, and then the second person, Aaron, is asking about NFTs. Are they considered collectibles, or do they fall into the crypto?
That's another really good question. And honestly, right now, I can't really tell you. I think from my personal experience right now is because they're so new. Cryptocurrency has been around for a while, but IRS just finally starting to tell us some of the choices and some of the directions of how we need to approach it. NFTs are so new and just popped up on everyone's radar that it's hard to decide because, and from my personal experience, they're probably going to treat it as a collectible because, it seems like the cryptocurrency. It's only valued at what people are willing to pay for it. But this is with the NFT because there's that art complex to it. I'm not sure if you can. But again, there's probably a CPA out there that will say, yes, you can, because they can prove it. And if they say you can, and they can prove it to the IRS that, based on their language that it works, that's completely fine, So you definitely have a conversation with a CPA that understands both self-directed IRAs and cryptocurrency and NFTs and see what their thoughts are. But because it's so new, I honestly can't give you a direct answer of yes or no.
So mentioning CPAs, Kathy is asking here, do you believe that most accountants know how to deal with self-directed IRAs, or should she seek somebody who has specialized knowledge?
Definitely not all accountants will have this knowledge. And not every CPA, not every attorney will have this knowledge. I have plenty of conversations daily where, your CPA will reach out to me and ask for specific questions about things. So definitely try to find a specific individual that specializes and understands self-directed IRAs to have this conversation. They are out there, and but yeah, I wouldn't just reach out to any CPA and just ask them questions basically about it. If you think they don't know what they're talking about, move on. Like anything else, knowledge is key on this, and consult with multiple different individuals before you decide to move forward.
Okay, so we're going to end with two additional questions. So the first is Marlene, just because she's persistent. She's asked this twice. The $7,000, I guess that's the cap for the year. Is that also for a Roth IRA?
Correct. They're both, your traditional and your Roth are both the same limits on it.
And that's the limit for over 50.
That's over age of 50, correct. It's basically what the IRS treats it as a catch up. Mm-hmm. So if you didn't contribute it throughout your years before age of 50, at age of 50, they tell you, oh, well, here you can contribute a little bit more to be able to catch up with the rest of the individuals. So
Nakashi, a CPA is a certified public accountant, and an NFT is a non-fungible token. So that's part of the crypto space. And if you Google NFT and crypto, you will be able to read more than you can ever possibly imagine about this, but it's a new asset class. Great question. Thanks for asking, because we assume that everyone knows what NFTs are, and we shouldn't make that assumption. So,
and honestly, you're right. And it's just such a new thing that popped up, honestly, on most people's radar only about 2 months ago, 3 months ago. Before, it was just kind of that hidden acronym that you'll see on the internet, but no one really understood it. No one knew what it was.
Yeah, but it's like making a ton of money. People are putting all sorts of money into NFTs. So, all righty then. This is the last question we're going to ask, just because I think it's a fun question from Ebony here, asking, can she stay in the home that she uses, that she purchased through her self-directed IRA? Can you stay in that house as a primary residence?
You cannot, because it goes back to that rule of you cannot personally benefit from it. And so what IRS wants to see is that, it gives you ability to invest through self-directed IRAs to diversify your retirement funds. And, it's not an investment really if you're living in it. The whole concept of it is if you can buy your condo, you can buy a house, you can buy a piece of land that you think is going to appreciate. That's completely fine, but you cannot personally use any of it. So you cannot buy, 200 acres and go hunting on it every year. Technically, you can own it, but you cannot use that property for anything else besides just investment purposes.
It seems like a bit of a contradiction, though, that you can move your 401k money into an IRA and not be able to then benefit from it, like we're just talking about staying in the home you purchase. But if you keep it in the 401k, you can use those dollars to purchase a home.
Well, but you're gonna take that money out of your 401k. So you can't really buy a house in your 401k. You can buy it with your 401k funds. So what you're gonna do is you take a distribution out. And so what you can actually do, and this is something we see a lot for individuals that are, maybe 5 years from retirement. Mm-hmm. And so they know, for example, want to move to, I'm in Arizona right now for a conference. So let's just use this as an example. They want to retire in Arizona because it's warm out here. They know they're going to retire in 5 years. They will purchase that property that they want to move into eventually in their IRA. They will rent that property out for those 5 years that they're not 100% retired and moved in there. And within that 5-year period, what they can do is they can take a partial distribution of that property. So use an example, just to make it easier, brought a property at $100,000. Let's just say the property doesn't appreciate, doesn't depreciate, it stays constant at $100,000. You can take those 5 years and you can take that 20% out of the property as a distribution. So every year you take that 20% and you're only paying taxes on that distribution for those, for that $20,000. So instead of maybe for you taking out $100,000 out of your 401k or your IRA and paying the taxes 100%, $100,000 of additional income, that will put you in a lot higher tax bracket. Yeah. And so taking a distribution over multiple different years of the property, you can definitely do that. And by the time that you took the property 100% out of your IRA, and you own it personally, that's when you can move into it. And so that's a strategy that a lot of people have used previously and continue to use, because, who wants to pay that extra taxes on an investment that you might not even move into anytime soon? So it's just and that's another aspect where consult a CPA for this kind of type of strategy, because they will know what your tax bracket is going to be, or at least estimate what the tax bracket is going to be, and figure out how much money you can save doing it. We can give you a concepts of it. By the end of the day, we don't know your full picture. And so that's where the CPA comes in, and, we'd be happy to educate them as well. So if you have a CPA that you've been working with for years and they might not understand the concept of it, have them reach out to me. We will put them, we'll put plenty of information in front of them for them to learn it, understand it. We'll send them IRS codes for it. So we're that's what we do. We educate people. And so we'll be happy to work with anyone about this.
Fantastic.
Thank you, Autumn.
Thank you so much for being here tonight. Again, how do people get in touch with you? What's your email address?
It is anashman@Medland Trust. If you want here, I'm just going to share the screen one more time so people can see this real quick. No. That is my email address. That is my direct phone number. So you can reach out to me anytime. I will also, Shri, I will send you, as soon as we get off, that self-directed IRA guide that if you want to pass over to anyone that's on the webinar. It gives a lot of good information on there. And, feel free to reach out to me with any questions, or if you want to schedule a call, I'm happy to do so and just kind of understand your situation a little bit better and see how our experience can kind of help you at least, figure out how do you want to approach things.
Perfect. All righty then, everybody. Thank you so much. Hope you'll be back in an hour for the Bet on Black pitch.
Don't forget to invite them to tonight. Yeah.
No. I'm on it. I'm on it. So thank you, everybody. Hope you have a great evening. Come back in an hour. Take care. Bye-bye. Thank you so much.